Hello everyone and happy Friday. Before we share my analysis from these last few days, please remember that neither I nor the SIMETRI team from Crypto Briefing are licensed financial advisors. What we provide is not a personalized investment advice. It is merely our opinions based on our various research and diligence. As always, do your own research before making any decisions about buying or selling crypto. Moving on to the technicals, I think the key breakout point this week was 29.3, and that's because the 20-day moving average was located there. So once we broke above there, we've obviously seen a move towards above 32,000. That could be support coming up, and especially into the Fed. If we don't get above the new monthly pivot point, which is calculated today at 31,500, then Bitcoin's going to stay in trouble. The weekly pivot point is obviously underneath there now at 31,000. And the upside targets I would be looking for would be 33 and 35,000. But bear in mind my comments about the 20-day moving average and the lack of supporting buy orders really underneath that area, extending down to 25 all the way down to 20. I think 23 to 20 is where the largest orders are stacked. So there's definitely two sides of the coin going into the Federal Reserve meeting. If we see here the weekly chart of Bitcoin, we could definitely see a rebound towards the neckline of this pattern. There's sometime in future if we don't make a new low. I think that comes in at about 37,000. And you remember that this was also the former swing low that the market couldn't break. Then it rebounded to 48,000. And once it broke it, we haven't had a retest. So it makes a bit of sense from a slightly more medium-term picture that if the market did pick up, that could be an area that the market could gravitate to, either be strongly rejected or start to move into a new uptrend. It very much depends on the Federal Reserve. And this week, it's all been about the double bottom pattern, which I've been highlighting in my pro BTC email quite strongly. And that bounce has started to obviously take place with the double bottom forming, which is normal and logical considering how long that we've been sold off. I think the key point here is, are we going to be consolidating between the 20 and the 50-day moving average ahead of the Federal Reserve? And if you look at the importance of the 20-day moving average, once we started to move under there was no going back for Bitcoin in April, and it's remained underneath there. And now it's broken above there. It's kind of set a precedent in the market and some stabilization. And I think the 50-day moving average around 34.7 is going to be a natural target. If we moved above the 50-day moving average, bear in mind my comments earlier about the former yearly low at 37 probably acting as a magnet for price. If we look at that play more extensively, it becomes a little bit more visually pleasing here on this chart. So we can see here the former yearly low, and you've got that area where the market's coming in now. So that 33 area and that 34 area, there's probably going to be the first targets if the market starts to move up. And if it starts to get comfortable above that level, then we can move higher. But there's something else going on in this chart that you can't quite see here, and I'm going to highlight it here. We do actually have a head and shoulders pattern here. And the problem for Bitcoin at the moment is that's broken, and there's a chance that we're just going to come back and test that neckline. And if we get rejected from pretty much the 50-day moving average and we start to move up sharply lower again, then this pattern still hasn't played out to the downside yet. And the thing is, the overall target of this pattern is $20,000. And if you'll bear in mind my earlier comments, there's a stack on the order book is very, very large around there, and that could be what the market is looking at. So if we don't start to stabilize above there and we get rejected, bear in mind that scenario. And the other scenario, if we do get above there, then 37,000 would be my first target. But just bear in mind this chart pattern here, because that could start to play out in the market. So overall, 33 or 34,000 is certainly very plausible, and it's a natural gravitation area for Bitcoin. Now, we cannot discount a reversal back to the former yearly low around 37,000 if we start to get above the 50-day moving average. So for me, a drop below the 29.3 level could cause a significant decline, and we could probably see 25 again, very easily tested. There is head and shoulders patterns, and there are many, but the one to pay attention to at the moment is, and the more realistic one, is probably the small head and shoulder pattern. If we don't get above 34.7, bear in mind the target that I'm saying of $20,000. So let's take a quick look at Ethereum. And again, it's this perfect double bottom pattern that's playing out in the market. You can see it there almost perfectly. It's played out, and we've bounced. The bounce hasn't been as strong as I anticipated so far, and we may even come back and get a triple bottom in the market at some point if we don't sell off heavily after the Federal Reserve. I think as well, it's very similar to Bitcoin in that we do have this head and shoulders pattern. It makes a lot of sense that we could get to sort of like 2,300 in there. So there's some bullish and bearish factors obviously in there. The fact that the market can't get past that former yearly low, and it got rejected on the first up move. So if it did make a lower high, bear that in mind. And if it broke underneath here, it would be hugely bearish for Ethereum. But there's definitely a plausible play in the market where we go back to 2-3 at some point and test this neckline, and then it's a deciding point for Ethereum. Another possible play would be this head and shoulders pattern that's charted in a different way, but is still no less valid. So that comes in about 2.6, and if you remember, earlier in the year when we broke past that 2.6 area, Ethereum just collapsed. So Ethereum does have a habit of breaking down, retesting areas, breaking down, and again the trend is bearish. So we could see more of a long-term prediction here. We could see a move towards 2.6 if we're looking at a $37,000 Bitcoin. So that's the scenario. And obviously underneath this area here, there's no support really in the market until maybe 1,000 or something like that. So that's very bearish if we break underneath the lows. But at the moment, we're still pretty much consolidating, and we might get some momentum from the double bottom after the Federal Reserve meeting. So overall, Ethereum is pretty much sporting a perfect double bottom at the moment, and that's playing out, and that could turn into a triple bottom after the Federal Reserve. So do bear that in mind. 2,300 does look promising. And the overall picture shows that Ethereum could be headed back towards the former triangle breakout and the neckline of the pattern around of the head and shoulders pattern around 2,600. So that remains more likely than a break under 1,800 at the moment, but we'll have to see what happens after the Federal Reserve meeting.
And thank you. I hope you found my thoughts helpful. If you'd like more, please click the subscribe button for Pro BTC Trader and join me every week on Wednesdays for our live trading war room and daily email updates.